Hello, how are you doing? I wanted to take a moment and I wanted to share with you my best tips on how to go about getting financing. I want to share with you my best tips on how to find a loan officer and how to find a loan in order to purchase a property. So real quick, I just want to talk about the nuances of what a lender is. You have a couple of different terms. You have loan officer, lender, mortgage banker, mortgage broker, loan originator, loan processor. All those terms are kind of interchangeable. They kind of all do the same thing. Real quick, I just want to talk about a mortgage banker and a mortgage broker. A banker works directly for the company that's lending you money. So when you go sit down with a mortgage banker and they process your loan, that company that they work for will directly loan you the money to purchase your home. These lending institutions for the mortgage banker, they have millions upon millions of dollars in assets. They loan this money out for the year. They process as many loans as they can. At the end of the year, they package those loans as mortgage-backed securities. They sell it on the open market to hedge funds. These hedge funds, they have billions of dollars of assets. They come in, they buy these packaged loans. They get paid off of the term. If you got a 30-year loan, they get paid off of the interest rates. They also get paid when you call and make your payments over the phone, and they charge you a $4 or $5 fee or whatever the fee is. That's how these hedge funds get paid. That mortgage banker, their company, they get the money back. They wash and repeat. Next year, they do the same thing. You have mortgage brokers. They're basically independent contractors. They might have 5, 10, maybe 15 different companies in a Rolodex. They meet you at the office. They pull your credit. They get your information, and then they shop your loan to these 5, 10, 15 different companies they have in your Rolodex, and whoever's going to give you the best deal, and then they get paid that way. So they pretty much both do the same thing, but that's a slight nuance. When I meet customers for the first time, when I do meet and greets, when I meet people in the office for the first time, or if I have friends or family members that ask me, Arnold, what's the best way for me to get financed? How do I find a lender? This is the advice that I give every time. What you want to do is you want to check with 3 different entities. The first entity you want to check with, if you are a member of a credit union, you want to check your credit union. I'm in a military area. I'm in Hampton, Virginia. I have a Navy base, an Air Force base, and an Army base. Plus, I got a couple of shipyards here. So I'm a member of Langley Federal Credit Union. Navy Federal. Most military personnel are banked with Navy Federal. That's ubiquitous all over America. If you're in the military, you can bank with Navy Federal. A lot of times, if you're a family member of somebody in the military, you have a good chance of being able to bank with Navy Federal. There are over 4,000 credit unions in the United States. So more than likely in your community, you can find a local credit union. The reason why I recommend credit unions is because they have very competitive rates. If you are a member of that credit union, a lot of times they have special programs only for their members, where if you get a conventional loan, you might get a percentage rate cheaper than somebody who's not a member, or they might waive certain closing costs for you as a member. So if you can become a member of a credit union and you're looking to purchase a home in the next year, it might behoove you to go sit down at that credit union and see what they can offer you. The second entity that I recommend when I meet a customer who is interested in finding a home loan, check with a friend or a family member. In this business, loan officers, mortgage brokers, and bankers, myself as well as a real estate agent, we don't feed our family off of one deal. We feed our families off of multiple deals throughout the year. So 9 times out of 10, if you have a recommendation, if somebody's purchased a home with a lender before, 9 times out of 10, that lender has processed a lot of loans, and they're very professional. They're in command of their information and the facts. And 9 times out of 10, they can probably get you a good deal. The third entity, which is the obvious one, when you come sit in my office, I have 2 specific companies that work inside of my office. I've been in the business over 15 years, and I probably have 4, maybe 5 at the most. I deal with them all the time. I'm not going to deal with a loan officer for you, and then I have another client come in and I find a new loan officer, because if it ain't broke, don't fix it, right? When you have a loan officer who's professional, who's good at communicating, who knows what they're doing, 9 times out of 10, if you can get financed, who I recommend can get you financed. So you want to check with 3 different entities, right? So another piece of advice, another piece of information I want to give you. They have something, it's a federal law that was enacted in the 60s that's called a Truth in Lending Act. And in layman's term, what that is whatever lending institution you're dealing with, they have to be honest and upfront and transparent with you in what they're going to charge you for your loan. So when you go to a credit union, you can ask them for a printout. They're going to tell you what your estimated payments are going to be at this specific interest rate. They're going to tell you what your fees are. When you deal with your friends or family members' referral lender, you can request from them for them to give you a printout and tell you what fees they're going to charge you, what your interest rate is going to be, what your estimated payment is going to be. Then you can comparison shop. You can look at these 2 pieces of paper and you can say, this one is cheaper than this one, or my payments are cheaper, or whatever. When you check with my loan officer with the Truth in Lending Act, you can request my loan officer, my company, to give you a printout. So then you can comparison shop, all things being equal. Obviously, when you purchase a home, you want to be able to get into a house with the least amount of money up front. You want the lowest down payment, and you want your lowest interest rate, or you want your lowest monthly payment on your home. So you can comparison shop and choose. Another very important piece of advice that I want to give you when you are purchasing a home is, when you shop for a loan, for a home loan, they're going to have to pull your credit. There's no way around it. It's like if you go to the doctor's office, and every time you go to the doctor's office, they're going to check your blood pressure, right? Every time you shop for a loan, they're going to pull your credit. It only takes 3 points off your score, 3 to 5 points off your score. If pulling 3 points off your score is going to hurt you, you're not ready to purchase a home anyway. My best advice, really listen up. This is my best advice. When you are ready to purchase a home and you check with 3 different entities to get finance for a home, you want them all to pull your credit in the same 30-day period. That way, when it reports to Equifax and TransUnion and Experian, it's only going to show 1 credit pull. It only takes points off your score 1 time in a 30-day period. What you don't do is you don't check with one lender. This is May. You don't check with one lender in May and then go check with another lender 30 days later in June, and then go check with another lender 30 days later in July. That's going to show 3 different credit pulls, and that's going to pull points off your score 3 different times. Also, even if it's in a 30-day period, you don't get checked for a home loan and then the next week go have your credit pulled for a car loan, and then the next week go have your credit pulled for a furniture loan. Those are going to show 3 different pulls on your credit. You want your credit pulled for the same type of credit in that 30-day period. So that's my best advice. When you are ready to purchase a home, you want to deal with 3 different entities. You want to comparison shop with that Truth in Lending Act. You want to see who's going to give you the best deal. You also want to check and see who's the best communicator, right? One caveat I will have with credit union that I'll throw in here real quick. When you deal with credit unions, a lot of times that person you're directly dealing with might not be the most knowledgeable or the most seasoned loan officer. A lot of times with credit unions, you might be dealing with a teller, right? Once you submit your information to this credit union, you might have somebody sitting behind a computer that's just reading off to you what they need or what you need to do. And I might deal with Susan this week, And I might call next week to get an update, and Susan might be out and Mark might be at the computer terminal. And my experience with Navy Federal, a lot of times it takes them a little longer to close. So instead of writing a contract for 30 days, if we're doing something with Navy Federal, we might need to write it up for 45 days. So, but anyway, your loan officer is very important because they're going to need to communicate a lot of stuff to you in the back end. When you get approved and your loan goes to underwriting, a lot of times those underwriters need more documentation from you. So you want to deal with a loan officer who's very professional. So three different loan companies, have your credit pull within that same 30-day period, and use that Truth in Lending Act to your advantage so you can comparison shop. So I hope that's beneficial to you. I appreciate your time. Y'all have a great day.